Welcome to Inside India. I'm Amitoj Singh, and these are your headlines this Wednesday. A mixed trading session in Asia after the hefty sell-off on Wall Street. Japan trying to find a floor amid the global bond rout. Also, President Trump doubles down on his threats over Greenland as he prepares to address the Davos gathering later today. European Commission President Ursula von der Leyen says they are near a landmark trade deal with India as the bloc looks for opportunities outside the transatlantic. All right, to the Asia Pacific first, where gold has jumped to a record high once again, and that's having an effect. Perhaps rotation related to the safe haven trade, even if Bitcoin is down at this point in time. Asia markets mostly down. We're looking at only the China market. Shanghai is up. Hong Kong down just a bit. Well, not too much, muted. The focus, of course, on Japan, down once again as snap elections and the BOJ decision on Friday loom large on the yen, the bond market, and generally the stock market. U.S. markets down from 1.6% for the Dow to the S&P 500 and the NASDAQ down more than 2% each. The U.S. Tech stocks were down heavy, and as a result of that, the tech-heavy Kospi also down, and the markets are really awaiting Trump's speech at Davos later today. Cautious sentiment clearly all across Asia. U.S. futures, let's take a look at that. Pricing in modest gains when markets reopen later tonight. That's what we are seeing at this point in time. That's after a massive sell-off overnight. All the three indices, as I said earlier, tracking their worst one-day performance in 3 months, with the Dow and the NASDAQ both dropping over 2%. Markets playing catch-up after a long weekend, getting their first chance to react to President Trump's fresh Greenland campaign and the threat of new tariffs against its closest allies in Europe. A lot of action in the global bond market as well, and that's the focus really. We saw a massive sell-off in U.S. Treasuries, especially on the longer end of the curve, which sent yields spiking. Foreign investors growing cautious about the U.S. in general trade as well. A Danish pension fund announced overnight that it would sell off its holdings of about $100 million in U.S. Treasuries by the end of this month. The sell-off was in the U.S. was also spurred by a rout in Japanese bond yields climbing across the board as Prime Minister Sanae Takaichi's call for a snap election came in. This caused concerns around her expansionary fiscal policy and the impact that would have on Japan's fiscal health. Big concerns. A meltdown in Japanese bonds tend to have global spillover effects due to how much Japanese investors buy global debt. All of that could potentially change in the coming future. Also, looking at broader FX markets, what are they saying? We're watching South Korea, of course, simply because of an IMF report saying that Korea's dollar asset exposure tops the FX market size by over 10 times. So that's a concern for the IMF. But at the moment, we're looking at, of course, the dollar-yen, 157.95, hovering around that. The US dollar relationship with the euro also under stress because when you have the dollar effectively weakening, and that's had a global impact. We're going to have to try to see how that impacts the Indian markets later. President Trump, meanwhile, not letting up on Greenland. While speaking to reporters overnight, well, for more than an hour, close to 2 hours, Trump said there's, quote, no going back, and that he will be speaking to leaders about all of it when he heads to Davos today.
Have other alternatives. But what we're doing now is the best, the strongest, the fastest, the easiest, the least complicated.
Sir, if you move ahead with the Greenland-related tariffs on Europe, you secured almost $1 trillion of commitments from them to invest in the United States. Does that go kaput out the window if that happens?
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that. But we'll see what happens. We have a lot of meetings scheduled on Greenland. I'm leaving tonight, as you know, for Davos. And we have a lot of meetings scheduled on Greenland. And I think things are going to work out pretty well.
All right, so Trump will be giving that keynote address in Davos, Switzerland overnight. And CNBC's Joe Kernan will also be speaking to the president right after that. We'll bring you that conversation later tomorrow. If you have questions, send them in to CNBC, of course. And Trump builds up pressure on European nations for his Greenland bid. U.S. Treasury Secretary Scott Bessent is already in Davos, setting up the agenda for Trump's visit, speaking to our U.S. colleague Joe Kernan. Bessent said the EU is funding its own war by purchasing Russian energy via India.
4 years into the Ukraine war, they're still buying Ukraine energy. They are buying refined products from India made from Russian oil. So 4 years in, the Europeans are still financing the war against themselves.
All right. This is going to suggest to the Indian market that Trump and Besant clearly are doubling down on the idea that they're not going to allow India to cross its red lines as India and the US try to come to some kind of trade truce around their own red lines. Meantime, European Commission President Ursula von der Leyen is also at the World Economic Forum speaking in Davos. She said recent geopolitical shocks are pushing the European Union to build a more independent Europe. Von der Leyen said the shift is permanent and must be recognized. She is expected to travel to India next week, and ahead of that visit, she signaled that the EU and India could soon finalize a trade agreement, describing it as potentially, guess what, the mother of all deals.
And right after Davos, the next weekend, I will travel to India. There's still work to do, but we are on the cusp of a historic trade agreement. Indeed, some call it the mother of all deals. One that would create a market of 2 billion people, accounting for almost a quarter of global GDP. And crucially, that would provide a first mover advantage for Europe with one of the world's fastest growing and most dynamic continents.
All right. So the Indian markets have two things to react to when they come online in about 40 minutes. Trump's threats, Besant's comment, that's the US perspective, and then the EU perspective that this could be potentially the mother of all deals. Gift Nifty futures indicating that there will be a positive tick when markets open. Remember, the equity market fell sharply, hit by its biggest single-day fall since April 2025. On Tuesday, Nifty went below 25,200 just before close for the first time since October 15. Went back up to about 232, as you can see right now, 25,232. Now, 48 out of 50 stocks in Nifty 50 ended in the red. Nifty was down in has been down in 9 out of the last 11 sessions, and it fell all the way from this Monday close of 25,585 to that 25,232, about 353 points fall, 1.38%. And the INR is what we're watching very closely because it's at right now, well, at the moment it's at 91.09, but it had closed at 90.97. So it's already breached that 91 mark. The question is whether it will hit its record. As I understand it, potentially has already hit the record low. We're looking at that. The earlier record low was set in mid-December at 91.0750. So it's 91.0990. We're going to be watching this space very closely. How much intervention will potentially come from the RBI as traders continue to give us that information? Let's talk about that to David Riedel. He is the president and founder at Riedel Research Group, joining us. Thanks so much, David. We really appreciate you coming on. I want to just start by asking you a question about Trump's Greenland threat to the EU. That he'll take the tariffs of 8 EU allies to 25% if Greenland is in America's. Denmark just fired off their own salvo, and this is critical in the global market context because this is about their pension fund. They'll sell off its holdings of US Treasuries worth some 100 million by the end of the month. Do you believe the bond market is the only thing that can make Trump back off?
Absolutely not. I think there's a lot of things that can make him back off. First, it doesn't make any sense for him to attack Greenland or try to take Greenland. It's just nonsensical. And I think that the Europeans are going to be very forceful. They've realized that he's not an honest broker. He's not someone they can trust or deal with on a rational stage. So I think they're going to take some very strong moves. Not just Denmark, but across the board, the Europeans own something like $8 trillion of U.S. assets. And I think even if they just stop buying additional, that's going to put pressure on all kinds of U.S. assets.
Can the EU take on Trump in a war that it potentially can't win in this context? There's an opinion piece on Bloomberg about this, which says that probably the EU shouldn't go down that road.
Well, I think we can take an indication from what China's been able to do, right? They've diversified their export markets and they've seen their exports grow. And India's going down the same path, partnering potentially with the EU coming up soon, and then entering into new trade agreements across the region and around the world. So I think there's a parallel trade system that's being developed with Canada and the European Union at the center of it, creating new networks. And that's one of the reasons that we're recommending people continue to buy regional trade stocks that play on trade within Asia, within Latin America, and within Europe.
Talk to us a little bit about Japan. With Japan's snap election and the BOJ's rate decision this Friday, moving these JGB yields and the yen against the backdrop of Trump's tariff threats on Europe. The question is, does Japan become the first trigger for a global risk repricing, and how directly does that spill into, I would say, capital flows and valuations in India?
Well, I think that the Japanese news is unfortunate timing, unfortunately, calling the snap election and then being on the campaign trail, promising cuts to taxes and very heavy spending, I think is going to spook any market. So I think it's unfortunate timing. I think that Japan has been early with their response to this and really trying to turn around the negative sentiment as quickly as possible. I don't think Japan becomes the contagion that sparks around the world. I think people are going to start to look at their own markets, their own regions, their own economies, and how they can separate themselves from U.S. trade flows.
All right, so U.S. bonds, equities, and the dollar selling off. Where do investors protect their capital? What do you think happens? Gold, Europe, emerging markets, where do people put their money? What would you do with your money?
Well, we're recommending to our clients that you buy regional powers that can withstand this. Large regional economies like India or Indonesia, places like this. Things that have a defense leaning, both in terms of armaments, things like ST Engineering and China CSSC Holdings, the port company. I think Adani Ports and SEZ would be something we'd be buyers of, as something where people can trade on continued regional trade independent of the U.S. So we'd buy defensive stocks, we'd buy defense stocks, and we buy regional trading stocks, ports, logistics companies, things like that.
Okay, that's fascinating. I want to dive into that in just a bit, but let's just understand this, the Sell America situation right now. Even if markets calm down, all right, we know that President Trump reacts usually to equity markets and bond markets falling, and he perhaps could climb down from his high mantle. We don't know if that'll happen when he is in Davos, but it's possible. It has happened in the past. So. Yeah. Do you expect the Sell America trade to return with vengeance, even if it calms down right now, the situation?
I think it will. I think people have become weary of the continued attacks out of the U.S. on their trading partners and allies around the world. I think they're looking for alternatives. They're looking for other places to invest. Even with the decline today, the U.S. markets and U.S. assets have been incredibly strong over the last decade. I think a lot of people are going to be looking for other opportunities in emerging markets, markets that have stronger upside and have stronger near-term growth. So I think the Sell America trade won't be as vicious as it was today, but I think it continues on the downward trend.
All right, let me ask you this, because markets have been selling off. Trump's been on Air Force One, at least for some hours during that time. Analysts often say that he usually chickens out, the taco trade. With such an impact on rates and equities, the question really is this time different? Is this a moment when you can't put the genie back in the bottle?
I think you can't put the genie back in the bottle. I think even if he climbs down a little bit, he's still going to be angry when he gets to Davos. He's still going to be frustrated and petulant. So I think he's still going to talk about Greenland in very forceful terms and be insulting to our European allies. But I think the rest of the world is going to move on. They've decided that he's not an honest broker. It's not a reliable trade or a place to invest. And I think they're going to be looking for other partners and other investments around the world. So I think the Sell America trade continues.
Let me ask you this. I was speaking to an Indian analyst, and the question on his mind was very simple. Is anything brewing like in 2008, the global financial crisis? Anything about that? Can you tell us?
I don't think so. I think that had a very particular trigger in terms of U.S. housing. We don't have that situation here today. I don't think we have the kind of uncertainty and fragility in our financial institutions that we had at the time. I don't see any hard trigger. I think it's going to be a shift in sentiment, and I think it's going to be a long and grinding trade of people turning away from the U.S. to the benefit of other markets, India, Singapore, other places where people are going to be looking for opportunities.
Interesting that you say that, because I was actually told by some analysts that the only way they see India having an exceptional bull market, not the 10 to 15% that's predicted for 2026 at this point in time, but the only way they have that exceptional bull market is if something bad happens in the U.S., which might be this particular moment. talk to us a little bit about Europe, because you had the EU, the EC, the European Commission President Ursula von der Leyen saying that EU is on the cusp of completing that FTA with India, adding also that it could be the mother of all deals. Now, just to put this in context, the trade between EU and India could go from 140 billion or so right now to 215 billion, which is a 50% jump at minimum. Now, does this offset the situation of a bad trade deal or situation with the US for India and for EU with the US?
Absolutely. I think the EU finds partnerships in China. They find partnerships in India. They'll find partnerships in Canada. And I think India has the same opportunity to find partnerships regionally and globally where people have like-minded commitments to long-term growth and a commitment to stability in politics, diplomacy, and economics. So I think India is in a very strong place for good medium-term and long-term growth with partnerships around the world.
I'm glad you said that. That was my next question. Almost everyone is bullish India long term. They have been for a while. It's frustrating almost to investors and traders and analysts. Fundamentals intact. Trump effect on sentiment is outsizing that fundamental right now. So my question is his current position, this idea of doubling down on Greenland, reflecting on the fact that he's not going to allow India to cross any red line with the US, even if there was any hope around negotiations, and they've been happening. The Commerce Minister, the Foreign Minister did meet a US Senator and the US Ambassador. So the question really is, at this point in time, the long term that you talked about, has that been delayed further?
I don't think so. I think India has an opportunity now to establish additional relationships around the world. I think, unfortunately, the US is taking itself out of that equation in the medium term for the next 2 or 3 years. I think longer term, in the medium term, the U.S. could come back to be a partner with India, but I think India is on solid footing to find other friends and relationships around the world. And I don't think the U.S. Being weak and being as confused as it is today is going to derail that growth.
All right, so Nifty hit by a big, yesterday was hit by its biggest single-day fall since April 2025. And from what I gather that you said, that basically means that it's time to buy the dip.
I think it is. I think you buy the large conglomerates that have widespread exposure both to regional trade and domestic growth. You buy things like HDFC Bank, you buy Reliance, you buy the Adani Ports and SEZ company. I think you buy things that trade on India's strengths, which are the ability to interact with other economies and drive solid economic growth at home and across the region.
All right. Interesting that you said that, because I want to talk to you about Reliance. Reliance has been in the news for basically saying that we're not buying any more Russian oil. There's been pressure on them. They've also gone to the U.S. to ask, wait, can you allow us to buy Venezuelan oil? So they've had a bit of a, well, let's say reorganization of their oil supplies, where they buy crude from. That was reflected in their earnings, in their Q3 earnings also. And Reliance was one of the big losers just yesterday. So what has happened is that Scott Bessent has said something very interesting, that, hey, the EU is funding its own war against Ukraine by allowing India to buy oil from Russia and then buying that same oil from India. What do you have to say about that? How will that impact the market? Because that's a very blatant statement.
It is. It's a very forceful statement. And I think Reliance is smart to get ahead of it. Smart to be in contact with the U.S., smart to try to thread that needle of interaction and smart to diversify its sources. I think the U.S. is going to be looking for markets for that Venezuelan oil. We certainly can't use it all. It's the type of oil we don't deal with as well as other parts of the world. So I think Reliance is smart to be approaching that diversification of their oil streams.
Tell me why you're positive on Reliance, because it has been, okay, it had a great run in 2025, but it's been down almost 8% at the start of this year. So why are you positive?
They're very strong on retail. They're very strong on energy. I think they've got a relatively low PE versus the kind of growth that they have in their growth peers. They have high free cash flow, and they've shown an ability to be nimble in this environment, which I think really sets them apart. I think global investors are going to be looking for diversified ways to play the Indian economy. And Reliance is one of the first things that comes to mind. And I think people are going to be investing in it around the world as well as in India.
Very quickly, retail was a problem for them. It has been a problem because they've had some good quarters, but then they've had some bad quarters. There's competition. There's a lot of funding required there. Why are you so positive on the retail side?
Well, for example, if the trade with Europe goes up by 50%, that's going to put a lot of money in a lot of pockets, and I think a lot of retailers are going to benefit. And I think Reliance has been nimble and they've been smart with their business strategies. Sure, there's been some missteps, but I think they're well positioned across the breadth of all their businesses to do well going forward.
All right, very quickly, two more questions for you. Are we at a point, just returning to the US, are we at a point yet where policymakers, across the world, not just the US, are going to have to step in to calm markets down? And I say this because do they step in at this time? Because the Fed is stepping in when it's difficult for the Fed to step in when relations with the Oval Office are so bad. And the situation is that Fed Chair Powell is personally attending the oral arguments in the Supreme Court case that challenges Trump's firing of the Fed Governor Lisa Cook. This is divisive optics.
Yeah. Of course, there's been a lot of attacks from the Oval Office on the Fed, but the Fed does retain its independence so far. So I think the Fed can do what it needs to do to defend markets if needed. And I think we can take an indication from Japan. They reacted very quickly to the sell-off today. They had calls with the U.S. right away. And I think Europe would be willing to step in as quickly as they could to support other markets outside the U.S. if they were under pressure. So I think around the world, people are being vigilant. They're being quick to respond. And I think that's going to serve the markets well. I'd be buying this dip.
All right, interesting. I know that you're positive on HDFC Bank. So next time when we get you, we'll probably ask you some more questions on that, David. David Reel from Reader Research Group. Thanks so much for joining us and giving us that great perspective. Coming up, we'll get you more from our conversations at Davos and why big international firms are looking at India. Stay with us. All right, what's happening with oil prices? Let's take a quick check on the energy markets. There's been global uncertainty, and that's what's playing into the sentiment. They're down. WTI down about, well, close to 1%, and Brent crude down 1.11%. What we do know at this point in time is that these prices have been impacted because a buildup of U.S. crude inventories outweighed a temporary halt in output at two large fields in Kazakhstan and general geopolitical pressure that we're seeing. We're also being told right now that these oil productions at these two Kazakh fields could be halted for another 7 to 10 days. That's what has been told by 3 industry sources to Reuters. The output halt at Tengiz, one of the world's largest oil fields, and Karolov is temporary, and downward pressure from an expected rise in U.S. crude inventories along with geopolitical tension will, of course, persist. But let's give you a sense of how this connects to India, because India has signed a $3 billion LNG deal with UAE state-run firm Aramco Gas, making India the Emirates' biggest customer in something that was very strange, very surprising. A 3-hour visit by the UAE president to India. His flight time was longer than that visit. On the sidelines of the World Economic Forum in Davos, CNBC's Dan Murphy sat down with guess who? Aramco's CEO, Amin Nasir, and asked him about his outlook for energy demand and where it will come from. Here's what he had to say.
What is important for Aramco or the energy marketing is to make sure that we have a good growth in the economy. With more growth in the economy, there is going to be more demand for energy. And this is what we are counting for. So far, the economy last year was resilient in terms of GDP growth. We are hoping this year is going to be also resilient in terms of growth, because that is important. What is the impact of anything on the global economy, and is there continuous growth? So we are satisfying different markets. It's very important for us to see the growth in different markets. For example, China is an important market. The 5% GDP growth was significant, and it is important that is sustaining it and growing it. And these are important markets. And we see that growth in India and other. So what is important of the whole thing is the economy growing? And don't forget, 2/3 of the growth that we will be seeing in global economy will come from the global south. And that's where we are counting on for additional energy. This is where most of also the consumption, 700 million people will be added in the population in the next decade. Most of them will come from the global south. They need better living standards, they need more energy, more cooling, more heating, and this is what we are counting on.
And we have a great lineup ahead from Davos today. Very exciting. An extended hour of Access Middle East, but our coverage will continue beyond that. Take a look. These are the people that you'll get the great perspective from. Of course, at this point in time, we're just switching across to what's happening with South Korea, the Kospi, particularly because President Lee Jae-myung is actually speaking right now. At this point in time, the Kospi is down about, well, nearly 0.2%, because South Korean President Lee has said the following things, particularly that he would have deployed FX stabilizing measures already if we had them, is what he said. He also said the FX market works on supply and demand, dollar won somewhat aligned with yen movement, but the won weakened less than yen's recent weakness, and forex authorities see the won to strengthen to around 1400 levels soon. So we're watching that space very closely, and that's where I think it's interesting, because right now the won is against the dollar of 1472. He also said that we will work to stabilize the FX market, and the won really turning higher against the dollar after these comments. We'll take a break right now. We'll be back more and we'll talk about India's healthcare sector right after this. On Wednesday, the Supreme Court will consider the legality of President Trump's bid to sack Fed Governor Lisa Cook, with a decision likely due next week. Cook has been allowed to continue serving on the Fed while the court deliberates the case. But if she is indeed removed from the central bank, Trump is expected to take the chance to stack the board more in his favor, feeding concerns around Fed independence. CNBC's Joe Kernan spoke to U.S. Treasury Secretary Scott Bessent about this. Here's a slice of that.
Couple of things, Joe. My guess is that the president will reach a decision maybe as soon as next week. We've had substantial conversations about this. We've run a process that started in September. 11 very strong candidates. We're now down to 4 candidates. The president has personally met with all of them, and it's going to be his decision. In terms of the Supreme Court hearing, I believe, I'm not sure whether it's today or tomorrow, Jay Powell has announced he's going to attend, and Joe, I got to tell you, I actually think that's a mistake, because if you're trying not to politicize the Fed, for the Fed chair to be sitting there trying to put his thumb on the scale is a real mistake.
And there's a lot to talk about, obviously, with Jay Powell. There's this great economy that you were just talking about, so obviously the Fed has managed rates to the extent that it allowed us to get to where we are right now, notwithstanding what we saw a couple of years ago when maybe the Fed was too slow in the face of that inflation, the post-pandemic inflation. But there are other things that you've pointed to. Jay Powell is not just the chairman that sets interest rates. He runs this huge behemoth of an organization, unelected, that is a huge part of Americans, of their lives in this country. And you're CEO and COO of that organization, and that's where you have some issues.
Look, I think that the Fed's monetary policy independence is very important. I think that a lot of the issues around the independence are being created by the other things that are happening. So, let's look. Under Chair Powell's watch, we will have seen between 4 to 6 governors and presidents have to resign for ethical issues. That's out of 19, Joe. If that happened at a Wall Street firm, CEO would be out.
All right, this as we continue to track the bond market route, JGBs at the center of this amid rising concerns about Japan's fiscal policy. At this point in time, the 10-year at 2.329, we're watching that particularly because that's been on a downward trend. Treasury yields are backing off. The highs hit overnight, as we saw a sell-off there too. And this is a big concern. Billionaire investor Ray Dalio spoke to our U.S. colleagues in Davos about Trump's motives, or disruptive motives, that have been unnerving investors.
There are circumstances that have happened repeatedly that are analogous in history that you can look to. When you have a certain amount of debt, okay, and that means others are holding it as debt assets, such as bonds, okay, and you have to sell a lot more, there's a supply-demand issue, okay? Also, when they're holding that, they have to believe in that in terms of the supply-demand. And when you have conflicts, international geopolitical conflicts, even allies do not want to hold each other's debt. They prefer to go to a hard currency. Right. This is logical, and it's factual, and it's repeated throughout history.
So what would Ray Dalio do with his money right now?
Well,
Gold?
I have had, let me answer it this way. If you don't have any views on markets, and you say, what should be my strategic asset allocation mix? You would have a diversified portfolio of certain assets that would diversify each other. And then the question is, what would gold play? When you ask me what gold, it would represent between 5 and 15% of a normal portfolio, because it does very well when the other assets don't do well. It's an effective diversifier. So if you had no views of the markets, that's what you would have. And central banks would have a higher percentage than they currently have, okay? So I would start with that view. Now, do I have, then you make tactical tilts from that, right? Okay? Now, in my tactical tilts, I have been clear for quite a while that I would tilt away from bonds and bonds, and I would be tilting toward gold and have a greater than normal amount of that.
It looks like the market's been listening to him because that's exactly what's happened. Check on those prices. Gold right now, another record high. The yellow metal hit fresh all-time highs of 4,813. That's crazy. Also, just hours ago, silver also hovering near record levels right now at 93.65. Remember, analysts have told us that gold could go to 5,000, silver could touch 100. Also, just giving you another sense of what's happening with the Indian market. Remember, gold and silver, big in India. That's probably what's going to happen. Rotation is potentially happening. That's exactly what may have happened yesterday. What we saw with GIFT Nifty futures indicating that positivity, it did indicate some positivity even yesterday, but it was a rout. It went all the way from 25,500 or so to 25,232. Really something that has impacted the market. It's this global uncertainty around the US, Greenland, and the EU. Of course, what that means for tariffs on India, there potentially is not going to be a change. It seems like Donald Trump is doubling down on his entire tariff narrative. Also, the rupee, we're watching that very closely. It has gone ahead and hit a record low once again. The last record low was in the range of 91.07 in December, mid-December, right now at 91.16. Will the RBI intervene? That's the big question we're going to be watching out for. Also, India's infrastructure output grew 3.7% year on year in December, and that's something the market will obviously look at, that data, the fastest pace in 4 months, led by strong cement and steel production. Government data showed this. Now, growth picked up by about from 2.1% in November. Cement output jumped 13.5%, steel rose nearly 7%, and electricity generation rebounded to 5.3% growth. However, crude oil and natural gas production declined, while refinery output too remained weak. Overall, infrastructure output for April to December rose 2.6%, lower than last year, highlighting uneven momentum across sectors. We're also watching a particular situation with Walmart. Walmart-backed Indian payments firm PhonePe has received regulatory approval to proceed with its stock market listing, reports say, after confidentially filing for an IPO last September. Walmart, Microsoft, and Tiger Global are expected to sell part of their stakes. PhonePe, India's largest UPI payments platform with over 45% market share, is targeting a listing by mid-2026. Tapping buoyant equity markets. The company has more than 600 million users, and its losses narrowed in the last financial year. All right, switching to health. A quick look at Singapore and Malaysia-listed shares of IHH Healthcare. The group is betting big on India now after completing its mandatory tender offers in India's Fortis Healthcare and Fortis Malar hospitals. IHH plans to ramp up its capacity in the country with an increased hospital network. It also plans to add 2,000 beds in the next 2 years. And joining us now to discuss that and more is the man himself, Dr. Prem Kumar Nair. He's the Group Chief Executive Officer at IHH Healthcare, right here with us in the studio. Thanks so much for joining us. I enjoyed watching your show on Managing Asia with Christine Tan. That was quite spectacular. I love the part where you insisted that, yes, you are a doctor yourself, and so you understand that doctors are the most annoying, and it's not the patients. That was the best. All right. Let's just start with your expansion plans. You've been planning to add these 2,000 new beds in India for a couple of months now, as I understand.
Yes.
How's that coming along? Because this would represent a capacity of more than like, 1/3, I imagine, because you currently have about 5,000.
5,000 beds.
Yeah.
So maybe I can start, Amitoj, by just describing the Indian healthcare market and why we are so bullish on it, right? It's probably the most vibrant health market for healthcare, private healthcare today, right? There's a burgeoning middle class that can afford private healthcare. The demand exceeds supply quite a bit, right? And that's why hospitals can still expand in first-tier cities, NCR, Mumbai, Bangalore. But the second-tier cities are also ripe for healthcare expansion. So we are adding 2,000 beds to Fortis' 5,000. But don't forget, we also have Gleneagles, which we have now put under Fortis' management. That's another 1,000 beds. And then we will grow this, to 8,000 by 2028. And we're also potentially looking at M&As and bringing it up to 10,000 beds.
What kind of M&As, particularly?
Well, there are lots of, as you know, India is also
Just give us some color.
Well, nothing specific, but you know that we made some purchases of single hospitals.
Yes.
We did Shriman in Punjab, right? We just did People Tree
Northern state of India, Punjab, where I'm from.
Yes, Punjab, right? We did Manesar in NCR last year. So we've done 3 in the last year, right?
All right?
And there are a few more. So we can do individual hospitals, right? So we'll see if there's something else comes up.
Okay.
We will look at it.
Just also, since you were painting the picture around India, I wanted to understand this. IHH Healthcare is listed right here at SGX
Yes.
and in Malaysia. Fortis Healthcare is listed in India. We'll bring up the stock right now. It's been doing well. Currently, you hold about 31% shareholding in Fortis Healthcare. SEBI has given the go-ahead for you to actually make that more than 50%. When does that happen, and what should investors know about it? Because there's been this uncertainty around the court case in the Delhi High Court that perhaps is ended now once and for all, or is there something still lingering?
Well, there's still something lingering in the Delhi High Court. It is not entirely related to the big issue, the Supreme Court issue. That has been dealt with. The Fortis offer is closed, right? So we are free to put in capital and increase our stake. But we are in no rush. At 31%, we control the board, so we control Fortis. Gleneagles today is managed by Fortis under a management services agreement. At the opportune time, we can fold Gleneagles into Fortis, and that will increase our stake naturally. We can do a preferential offering. There are many ways in which we can creep our stake up. Of course, we hope one day to be more than 50%, but we are in no rush because we can do whatever we want. Now that the SEBI matter is settled, we can do whatever we want in India.
Isn't there a time limit within which you have to do that?
No, there's no time limit.
Okay.
No,
All
we
right.
can do that.
Okay, but
over the
are you
next few
thinking
years.
about doing it in the next couple of months?
Well, we do it when we feel we need to do it, and by that I mean you'll notice that all of Fortis' expansions have been on their own steam, right? They have been doing all these acquisitions on their own because they are doing very well. Assuming they want to make a big acquisition, right, or major expansion, then I think IHH will be willing to put in the capital, right?
You know, there was this hangover of reputation damage because of the court case and
Yes.
everything that happened with Fortis. I don't want to get into that, but I think that picture is over now. Would you say so completely?
I would say it's over, and I tell you, it's primarily, it was because of Fortis' reputation. I think Fortis has a stellar reputation in India, right? As the group CEO.
I know. I've used the services. I understand.
Yeah, it's got a stellar reputation, clinical governance, clinical excellence, very good, right? So I think the Fortis brand name, which by the way, we have acquired, right? From the erstwhile promoters.
No, that was part of the case. Yeah.
We've got it. Agilus, which is our lab, which you remember a couple of years ago, we took Agilus in as well, right? Where Fortis owns about 90%. That's doing very well as well, good margins, right? We've got the SRL name back as well. So Fortis is a good place, Agilus is in a good place, India is fantastic for us.
Q3 earnings for Fortis coming a little later, around Feb 12th, as I understand. That's Q3, around the 13th, sorry. Q4 earnings for IHH around 28th of Feb. Care to give us a sneak peek?
Well, obviously I can't tell you what the results are going to be like, but I think you just have to look at how IHH and Fortis have been doing in the last few years, right? Double-digit growth, top line, bottom line, margins have expanded. Fortis, last quarter, right, almost 23%. I think it's only a matter of time before we move up to 25%, right? Which is about the Indian sort of, the other hospitals doing as well. IHH, we have always said 22 to 24%, and we are always within that range as well. So, yeah, I think the market can expect,
Positivity.
Positive, yeah.
Okay. You can't give us the clear numbers of Q3, but you can give us a sense from Q2. Average revenue per bed and average length of stay, apart from the increasing number of beds. Those are the three primary, characteristics of what growth looks like. So,
yeah. So we'll continue that trend. Average occupancy is at a high of more than 70% in Fortis, right, and the group as well. So Fortis, they are improving the occupancy in all their hospitals, right, and where occupancy is that there are some hospitals that are 80, 90%. So we are doing a massive brownfield expansion. A lot of the expansion is coming from brownfield. Yes. And as you know, the operating leverage for brownfield is much better than a greenfield, right? So that's Fortis strategy, which IHH fully backs, right? We'll see more of that.
You see more of that. Okay. What's setting you apart right now from Apollo, Max, Medanta, in the near future and later?
Okay, some of our competitors are region specific. Right, Max is predominantly NCR, as you know. Yeah. Apollo predominantly in the south. Fortis today, with Gleneagles, has become a pan-India platform, right? Because we are in Punjab, right? So we've got 5 areas, right? We've got Punjab, we've got NCR, we've got the west, we've got Bangalore, right? And now we're in the south as well, in Chennai. So I think we will grow each of these clusters because there's still plenty of opportunity.
Aren't you behind Apollo in terms of the number of beds though right now?
Yeah. Yes.
So,
But at 10,000, we will be right up there. We'll be the top 3.
Okay. All right. Apollo also has plans. I want to understand this. How are you managing prices when competition between Apollo and Medanta and Max and you are as high as they are, and medical inflation? Give us a picture of that also. How are you passing this on to customers? How much are you passing on to customers?
So medical inflation in India and also in our other markets, Malaysia, if you remember last year, they had a very, very big issue. Medical inflation is high, right? We do not have the capacity to keep increasing prices. That cannot be a strategy, right? Because our patients, our policyholders, insurance policyholders will suffer. So we don't do that. So we...
Little bit you do, don't you?
We do. We just try and capture a little bit, 1%, 2%.
Okay.
That's all we do. But inflation is at 5%. Malaysia was 15%, right? So we can't do that. So we'll have to do other things. You will notice that the intensity of our procedures is going up. By intensity, I mean we are doing more and more complex procedures, all right? What was being done in the past now with the robot, proton therapy, Fortis has got a MR Linac, gamma knife. These are highly, technical procedures for which, of course, the intensity is much higher. So we want all our countries to move higher and higher up the intensity ladder. Secondly, of course, volume growth. And one of the big areas of volume growth in all our countries is medical tourism. Foreign patients coming in. Same thing, Fortis as well, right? Okay? We have patients coming from Africa, Central Asia, the Middle East, all right? That's the next thing. Okay? The third thing is managing costs. We really have to manage costs. And IHH is in a great position today because we've got a global procurement platform, right? We don't buy CapEx, big items, machines, MRI, CTs in countries. We buy it globally, we negotiate directly with suppliers, and we get the best landing prices in every country that we operate in.
How many are you sending to India compared to Malaysia and Singapore? I want to know that.
I can tell you, India today buys probably the most machines, right? CTs, MRI, Linacs, right? They buy the most robots.
So you're prioritizing India?
India is.
Compared to Malaysia and Singapore?
Well, these are all our big growth markets, right? Malaysia as well. But India is, as I mentioned at the start, right? It's the most vibrant market, a lot of growth, and of course we will put in the capital to grow with Fortis.
Let's talk about margins. You said, you've indicated this in the past also. The surgical cases, the mix is higher and driving the output. But this should moderate, you said at the time, a couple of months ago. Has it moderated?
Okay, so what's happening is that medical cases, right, which generally just involves a hospital stay, right, maybe laboratory tests, some diagnostics. Medical cases today can be managed pretty much on an outpatient basis. Someone with pneumonia, you don't need to admit the patient. You manage them outpatient, follow up in the specialist clinic, the respiratory specialist, repeat x-rays, treat them with antibiotics, and they are good. Surgical cases are the ones that we prioritize because a procedure needs to be done, right? But we also want to do it efficiently so we can turn the beds quickly. Using robots, using things like early recovery after surgery protocols and all these, we try and keep patients for a short period in hospital. Patient goes off and we turn the beds quickly. So that's the strategy.
Okay, that's a strategy. Just tell us about your patient mix. You're very bullish on international tourism, medical tourism to India. Domestic versus international. Last numbers, as I remember, 26% growth year on year from international, and currently it's about 10% of revenue, mostly in NCR.
Yes.
How has that changed, evolved?
That's increasing. It increases by, single-digit percentages every year. I expect India to move up further. Yes.
Okay.
Yeah. So medical tourism in all our countries is moving up, right? In Turkey, where we are in, we've got a high of 20%. Singapore is 18%. Malaysia has moved up spectacularly after the island hospital purchase, right? From low single digits to 15% in the last quarter. If you remember, Fortis was low single digits as well, just a few years ago, right? Today they are 10%. So I'm sure they will move up because India is great value for money.
Yeah. Are nurses losing their jobs because of AI?
Nurses are what I call the last mile, the last touch. We need, and the world is short of nurses, right? So we still need nurses. But I think what we will do is to make the nurses more efficient. AI plus other stuff like healthcare assistants and all that will help to make the nurses more efficient.
Okay, final question. This is going to be fun. It's very close to my heart. I'm from Delhi. Pollution, as you know, is a crazy situation there. Yep. 13 out of 20, 11 out of 20, all these reports come, these cities, 13 or 11 out of 20 cities of India, where you have hospitals. All of these are amongst the most polluted cities in the world.
Yeah.
And your specialty is actually cardio. cardio sciences is where you have a specialty, a legacy specialty. I want to understand what you think should be done about this crisis. What are you doing to talk to the government about it? And what is generally the Fortis brand doing to help the people in these dire situations?
You know, Amitabh, this is not purely a healthcare issue, right? Of course, we treat the patients who are affected by this lung disease, heart disease, oncology, or environmental problems like this cause a higher incidence of cancers as well, right? Yeah. So we make it clear. But what we can do about it, I think this is probably something that's more in the hands of the government, all right? But I think the awareness. By the way, the Indian government is now very big on preventive healthcare, right? And I think they know that these are the things that they have to tackle, and I hope they do.
But where is it on the priority list of policy reformation and change from your perspective when you talk to the government that, hey, we can't have so many clients coming in with these kind of issues, come on. It's bad for productivity.
Yeah. Well, you know, we use whatever forums we can. There are a lot of private healthcare forums, a lot of healthcare forums. We try and do our India CEO was the head, right, of Net Health, right? And I'm sure we use all these forums to tell the government. But I think this is a multifactorial, multidisciplinary issue.
It's incredibly complicated. Yes. I understand that. Thanks so much for taking the question and coming on. It's always great to have the one-on-one conversations. Thanks so much. And good luck for Q3 and Q4 for both the companies.
Thank you.
All right, that was Dr. Prem Kumar Nair from IHH Healthcare. Indian markets have joined the trading day. We'll look at some movers in Mumbai after this very short break. All right, welcome back. Indian markets have come online. Nifty 50 was just a couple of seconds ago. It was down. It's muted now at 25,230. Remember, yesterday was a sell-off day, a risk-off day. What we've seen is the situation evolve very rapidly. GIFT Nifty futures indicating that we could go all the way to 25,300 plus. But at this point in time, it's muted. It's how it's opened. Remember, global uncertainty playing into the mindsets of traders, and of course, the idea that you may not get any resolution with the US and India and that trade deal if President Trump in the US is taking on even his closest allies. The Nifty 50, we're watching that very closely because also one big company, Eternal, will be coming up with their Q3 earnings. The US dollar Indian rupee situation is very interesting because the rupee has now hit an all-time low for the second time in 2 days. Remember, in December was the last one. That was 91.07 or so. Right now, 91.2160. Let's move on now. India's competition regulator has approved Dubai-based Emirates NBD Bank's acquisition of shares in RBL Bank. The clearance follows Emirates NBD's announcement in October that it plans to buy a 60% stake in the Indian lender for about $3 billion, marking one of the largest foreign investments in India's banking sector. The shares right now up about 2%. Over in the retail space, we're watching that very closely. Shoppers Stop posting a 70% slump in the third quarter. Profits as consumers tighten their wallets amid slowing wage growth. The Indian department store chain says, while overall consumer demand has been tepid, an ongoing boom in beauty products have helped cushion the blow. Shares of Shoppers Stop right now, well, not too bad, up about or down about 10%, quite bad. Arvind Flash down about 2%. Trent, which had been down a lot, is down about 1%. Aditya Birla just about 0.5%. More on the earnings front, Indian jewelry retailer TBZ reported an eye-popping 170% surge in third quarter profits thanks to strong festive demand and a peak wedding season. India, remember, is one of the world's largest gold consumer markets, and soaring gold prices have also boosted demand for bullion as an investment vehicle. The broader jewelry sector in India is currently doing well, supported by higher disposable incomes and tax relief. So we're watching Indigo also because the shares of Interglobe Aviation, the parent company, has been interesting. Yesterday they did well, 0.25% up right now. This after it was assured the aviation regulator gave an assurance to them that it will maintain operation stability and have enough flight crew in place from February. The carrier faced major disruptions in December due to poor pilot roster planning. Authorities had temporarily relaxed night duty rules for Indigo pilots until Feb 10th to help stabilize these operations, a move that drew criticism from unions and safety experts earlier this month. Regulators did fine Indigo and took action against senior management over the disruptions, but some say it wasn't enough. Now, that's all the time we have today on Inside India. Keep watching CNBC because we have a special edition of Access Middle East up next with JP on. Don't go anywhere.